Hi, my name is Mark Biernat. I'm a monetary economist, and in this video, I'm actually going to talk about money, just not any money, the Russian ruble. I'm going to tell you about its demise, the evidence for its demise. You can counter that with counter evidence, but I think we have fairly good confidence that it is on a decline. The evidence is this: the 15-year, the 10-year, the 5-year, and the 1-year trend is solidly down when measured against the US dollar. This is FX US dollar to ruble. Now, if we drill down under a year, the 6-month, the 3-month, and the 1-month, the trend is down. If we drill down to the 1 week, the 5-day, the 1 day, and the intraday, the trend is down. We have a strong downward trend for over 15 years. That is evidence, and that's a hard argument to counter because the trend is your friend and the tape tells all, which means the trend is telling you something about the fundamental ideas of what is supporting a ruble or what's not. So the key idea here is it broke resistance. The short-term resistance was sitting about 1 penny, and it's gone under a penny. And it had flirted with a penny, a little bit over, a little bit under. But at this point, the daily close, although the ruble never really closes, FX today, was under a penny. And it consistently now is under a penny. That's resistance. What is resistance? Resistance is the psychological whole number barrier, for whatever reason, we're on a base 10 system that humans use before it starts to collapse and go down. In this case, it was a penny. And the Russian central bank was doing everything to sustain it above a penny. I mean, that's no bragging rights, a penny. Once it goes below a penny, anything can happen. The total collapse of the ruble, I predict it to be 120 ruble to $1, which is about 0.83. I mean, if it's at 007, 007, you know that it's 1990s again. And, Russia's Candyland. You can go there and buy anything. I wouldn't. So we're going to talk about what an interest rate is. So we know on a trend basis, the ruble is down, and there's no going back to that. If it goes up, it's either a dead cat bounce or maybe you'd see a plateau. Okay? And the longer the trend, the longer it takes to plateau. It may take 10 years to plateau or 5 years before it starts an upward trend again. Now, what supports an economy is capital, and capital formation at a private capitalistic level. And that doesn't exist in Russia, so this will accelerate the downward trend of the ruble's decline. So if you ask yourself, John Maynard Keynes, I think he made $1 million when that was way back then. He's an economist, just laying in bed and reading and trading currency. So if you want to know the fundamentals behind what supports a currency is capitalistic entrepreneurial formation. And it's a capital lengthening process that entrepreneurs feel safe that they can take risks over time and extend it outward, capital lengthening. And, the Robinson Crusoe example of, you're on an island, you just cup water, you hope you're going to be out of there in a week. You think you're going to be out of there in a year, you may build a trough or a pulley system. The more confidence that you have in the future, the longer your capital lengthening is. And that's going into the Austrian theory of capital formation. And that determines the underlying value of the currency, of course, relative to other currencies, if we say ceteris paribus. But in the intermediate term, what's more important as an indicator is the interest rate. And you can say, the interest rate, I know that, is 21% in Russia. It's not 21%. You say, it's 28%, 29, 30. That's what entrepreneurs have to borrow at to make any kind of profit. It's not that. That's the bank rate. The true rate or the natural rate is infinity. The Russian interest rate is infinity. And let me explain. And that is a sign of a collapse. What an interest rate was, if you go to Bombovic or any of the early theorists of interest rate, they never said it was a bank rate. That's the Fisherian, very simplistic rate. You subtract it from inflation and that the bank rate, and you get the real interest rate. That's not the interest rate. The interest rate is an intertemporal price. It's the price on time. It's the price that you have to pay for waiting. So if I buy something, let's say, put it to this way, simple terms. I offer you 1,000,000 ruble now or in the future, 1 year or 10 years in the future. How much interest would somebody have to pay you to wait on that? Or offer you $100,000 today, or $6,000 a year in the future? That's a 6% interest rate. I wouldn't wait anything for a year if I was holding ruble. I would sell it now and take it for real goods, for gold, for real assets, for potatoes. And that's what the Russians are doing. First, the real estate market went up. Now that's collapsing. It's a pyramid. Okay, it's too highly leveraged. What are they putting their money on? They're putting their money in the US dollar, number one, the euro, number two, it's Bitcoin. Bitcoin and crypto is going through the roof because that's the only safe haven they have. So again, interest rate is an intertemporal rate in which you trade money now for money in the future, and it's the price of waiting. Now, if I were to explain it more complexly, that's the entrepreneur's price of waiting because he's thinking about capital formation and lengthening. But relevant to the collapse of the Russian economy, and the evidence is that you personally wouldn't buy a Russian real estate asset, you personally wouldn't buy a Russian bond, and you personally would not wait a year holding ruble in your backyard in jars burying it, would you? What's the price somebody would have to pay for 1,000,000 ruble now, or how much ruble in a year? Because, the ruble might not exist in a year. So there's no person on earth, a sane person, that would take that. So I can make the claim that the Russian interest rate is infinity now, based on the time value. And it's incongruent, the bank rate and the natural rate. See Knut Wicksell. So what does that mean for the currency of the ruble? It means it's collapsing. And that if it hits 007, where it's game over. If it's 120 to 1, which is 0.83, it's game over. If it goes to in the 8s, 0.8, it's 0.008 of a penny, it's game over. Let's watch it as it hits the 90s. Okay? It looks like it may sustain a little bit above 10, but it's going down. What does this mean for Ukraine? As long as Washington and the world stay strong, it doesn't lift the sanctions. Ukraine's good. All they have to do is survive. And it will internally decay. Remember, the Roman Empire, 75% of the decline of the Roman Empire, and there's a claim that Russia's the third Rome. Some people say, America's... No, it's not the third Rome. The Rome, Byzantine, and then the Byzantine emperor and princess and everything is declining from the inside out. 75% of the decline was because of, or 80% internal problems, including monetary problems. You can read any history of monetary economics. The barbarians were just like icing on the cake, pushing it over. Straw on the camel's back in ancient Rome. And like my video the other day, the Ukrainians, I like it that the Russians may refer to them as wild. Yes, because they're freedom-oriented. They're the ones that are going to bring it down. So the ruble, as long as Washington doesn't lift the sanctions and give back $300 billion in Russian assets, that has to go to Ukraine. That has to rebuild. It's a matter of, I was wrong. I was saying the end of 2026. It's a matter of 2025 sometime. It could be a matter of weeks or months. Because the tape tells all. If it broke resistance, there's something going on behind the scenes that we don't know about, and it's secret. And that's the idea of trading on technicals. You watch the trend. My name is Mark Bernot. I'm a monetary economist. Have a great day. Thank you very much.